The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Darrell Martin.
Welcome, folks. Tommy O'Brien, Darrell Martin here. My dad, Tom, is on vacation this week. Quite a week he chose for vacation. We got the Dow Jones up 191. We got the S&P up 22. NASDAQ up 70. Darrell Martin, what's going on?
Hey man, how's it going right now? The market's up and awake this morning. They're up quite a bit. So.
Just another day in this week, I guess, right?
Yeah, exactly. I heard, I was talking to one of my friends. He's a trader.
Okay.
And, he just basically said, get ready. Basically, like everybody's saying, just get ready for it. And there's a lot of good opportunities coming up. And I think that's pretty common. I mean, everybody's just enjoying it. And
saying get ready for it. Get ready for volatility. When we get ready for today's pop, maybe, or what? There's so much that it could mean, right? Get ready for it.
He's looking forward to Monday because the 5-day timer runs out on Sunday.
Sure, right. I know. That's why, I'm surprised really to see. What really changed? We knew they were going to come with a proposal, and we knew that it was going to come Sunday, and, the market says, oh, my goodness, well, let's just skyrocket to the roof because they put a proposal out.
That's sort of been the pattern, though, because, you think about it, what happened, a week ago, 2 weeks ago, right? Like today, pretty much. Markets closed all jittery.
Right.
Okay? And they opened up on Sunday, and boom.
Right.
Things drop, 100 pips, 200 pips, whatever.
I know. It's wild.
And they fly down all day Monday, and then they sort of level off a little bit Tuesday, got a little more volatile, and then Wednesday, Thursday, Friday, climb up.
I know.
And then, boom, it explodes again last Monday.
Yeah.
Like last Sunday, Monday, when the markets open up. You had 400 pips on the pound yen, 150, 200 pips on the euro dollar, all that.
Yeah.
And it was... And then I haven't even Tuesday it levels off, and
I was just gonna say I haven't even really looked at the currencies that much yet this morning. What is going on in the currencies? What are you trading?
If they're doing what they've been doing, they ought to be flying up right now.
Yeah.
And let's see, we got euro dollars up. I got my little market watch list here, 156 pips.
Okay.
We got euro yen up 336 pips.
Wow.
Okay. We got a pound yen up 357. So the exact opposite of what's happening, earlier in the week. We got pound dollar up 146. So some massive, massive moves happening there. And all the indices are flatlined now. They flew up this overnight.
Yeah, there's not much. I had the NASDAQ.
They're all sitting right at one deviation. Very dangerous zone to trade on at the moment.
That's good to know.
And, because it's basically, unless you want to go in there and scalp, which is always a great thing, take advantage of the chop,
Now, what were you thinking yesterday when the market ended? What happened even in the last 5-10 minutes? There was really a spike down, and it was at that same level that it keeps going down. And I said to myself, seriously, that that it's just going to pop in the morning. It's the same deal, and then it's run to that same exact level, and then maybe there's a sell-off at the end of the day. Maybe they wait, and maybe the fireworks are Sunday night, Monday, like you're saying.
Yeah, I had support zones stacked all over the place.
Yeah,
yesterday, right at the end.
Bet.
Came right into it, and then just popped, like you said, right after.
It's like
the pop was really last night. It was right after.
It was right. Closed. I know. What happened was I got home and I pulled it up. I think 8:30 at night just to see, because I was like,
that's
this
is a rare session. The 1600, 1800 hour.
I know.
6 o'clock usually is a dead.
I was surprised. Exactly. I was almost, but it's funny because I don't pull it up that often at that time either, for the same reason. I might pull it up at midnight or something right before I go to sleep, because obviously there's some action right then. And of course I pulled it up though because I thought something might have happened the way that it closed and the way it just continually goes down, and then it'll pop back up at that same level.
A report came out about the New York Stock Exchange. They figured out what was wrong with all their machines yesterday.
Okay.
Yeah, they had too much grease.
Okay. Yeah, right. I got you.
No, but I have no idea.
I was like, I hadn't heard that. What was their magnificent reasoning for shutting down their entire,
So,
man, oh man. So, what I was thinking about we can talk about today is just in general, the volatility isn't going to die down anytime soon. That's for sure. So when you were looking at this week, I mean, we were looking at 2% down almost, and then 2% right back up, 2% down. So in general, maybe, and not even being too specific with that type of volatility, what were you looking to trade? Were you looking to soak up that premium in the market, or were you maybe looking to profit off of the volatility?
I would have been, but you talking about like last night?
Yeah, just this whole week it seemed like there were.
I've been sucking all the premium in I can this whole week.
Okay.
So definitely.
Yeah.
Right now, I mean, I'd be really hesitant on going any longer. I think the market.
Yeah.
I mean, it doesn't have a lot of reason to go higher.
No, and it actually
has a big reason to go down. But I think anybody long that has any sense would want to be covering right now.
Yeah, I would
for this weekend.
Yeah.
Unless they already know the outcome. That never happens.
That's
right?
an easy game if you can pull it off, but
exactly. Until it doesn't work, right?
Right, exactly. Till all of a sudden you didn't know the outcome.
But I mean, Sunday, Sunday they're gonna come to the board with I don't know what. To me, just looking at it, the biggest issue is they had Germany. Like, it didn't really matter. Like the EU said you have 5 days to come to us.
Right.
Okay.
Yes.
But Germany still has to agree.
Yeah, and what's their latest? What have they said?
They've been really quiet about that.
That's what
they're on recess.
Okay.
See, it's not like just one person can sign.
Okay.
Merkel or whatever her name is, she can't just sign.
Yeah.
So for them to give any additional money, there has to be a realistic going forward plan in place, and that has to be approved by it's not really a Senate, but something like that. Parliament,
the governing body, whatever it is.
Yeah. They have a body that basically, whenever they signed on to this whole we're going to rescue the rest of the country thing, had to approve anything that came through.
Sure. Okay.
And they pretty much have approved everything with a bunch of complaining in the process.
Yeah, being vocal. Sure.
Yeah, but they're on recess.
Okay.
So unless somehow they're getting called back, and even if a proposal is provided Sunday, it doesn't mean it's approved. It just means they have 5 days to come up with a proposal.
And that's why, I mean, part of it, and I didn't know all of that, but even the market popped today. It's like, what is the major shift overnight, right? I mean, that was my take on it is, what has really changed in the last 24 hours with Greece and Europe? I don't see much really, but. Yeah,
and nothing really will change Sunday except for yet another proposal.
Okay.
And what proposal can they make that the people are willing to accept?
Okay.
Because I mean, their people just voted to say,
pretty resoundingly,
we really don't care. Screw you. We'll start over.
No, it's like,
we're
not happening. Right. Not happening. Not even close. Right.
Pull the drachmas out, and we'll back fund our currency at one if we need to.
Right. We'll just do it. Yeah.
And they're like, it'll be tough for 10 years, but then we'll have a lifetime of freedom.
Yeah.
And I get that.
I totally do too. When that vote came out, and if I was in there,
I sort of cheered. You
feel like you must feel like a prisoner in one way because you can't control your own fate. And when it
was sort of like screw the big man.
Yeah.
I mean,
it's one thing not being able to control your fate if life's going well, but when you're facing those types of situations and you're saying, well, these are our only choices, and you know what? Those aren't the only choices because they have another choice where they just say, I'm out of the euro and we'll just do it ourselves. And maybe that hurts our trade, but guess what? The country as a whole, within the country, maybe that's going to be better off for them, and that's what they think.
They survive for thousands of years.
That's what. It's not exactly. That's
they'll survive for thousands of years, without it again.
Yeah.
And the euro's really the ECB's freaking out because I mean there was no provision for a country leaving. It was the Titanic currency. It was it will never sink.
Right. It's just not going to happen. Yeah.
I mean, it's sort of like there's no provision for a state leaving the United States.
Right. Right. No. Yeah. Once they got them in, they didn't think that they'd have to deal with them saying, I want to leave, because they thought, oh, well, there'll be, everybody's going to want to be in the euro once they're in the euro. Who would ever want to leave?
Yeah, well, there's literally nothing in the treaty on how to even deal with it.
Oh, man.
Like, there's no exit clause.
Yeah.
There's just, we all agree.
Unforeseen situations, right?
Yeah, I guess they didn't have a U.S. regulator look over their disclaimer document or something
to say, hey, fellas, what about this situation, right? Yeah,
exactly.
that's impossible. That's absolutely impossible. That's what they go with somehow.
No, European members will be way too responsible.
Everybody's going to be in harmony. There'll never be a problem. Don't worry about it.
They get unlimited spending from Europe. They'll never spend too much. You know. What's really funny is they can print all they want.
Greece?
If you think
the
ECB,
yeah.
And Greece actually had the ability to print $10 notes all they wanted to, but because they have a printing press. But I might fill a lot of ATMs up. Sorry, why they would have been to $60 because they could only like print up enough to get 62 citizens, every citizen every day.
I'm sure it was talked about if they actually had one, man. I'm sure. Yeah.
Oh no, they do. They have.
Yeah, that's what I mean. I'm sure. Put it in overdrive.
And I'm sure it's already been like going at full throttle
Seriously.
right now. And but I mean, it's the whole concept, the way the economy's set up, and I'm just talking about like the irony of like the fiat currency.
Yep.
Is, I mean, the only reason that the euro even bounced, I think, back this week is I think ECB went into overdrive itself.
Okay.
And they inflated their currency.
Yeah. Yeah.
And but like all this stuff going on, it doesn't really matter. Like they can write a check. They're writing checks constantly right now anyway to buy their own bonds.
Okay.
Because I mean that's what our federal government's doing at the moment, right? They have the that's what. In short, what quantitative easing is.
Right.
They stopped doing any new additional, but they still have the QE. Where what they're doing is they're using the short-term interest rates at a low rate, and they're basically selling those, receiving funds, and then taking those funds and they're buying in the 10 years, and that's how they're suppressing the 10-year interest rate.
Okay.
And like we're buying our own bonds.
Yeah.
By selling short-term bonds, we make all that money, and we just keep buying more bonds, and that are 10 years, and that's we're basically artificially suppressing the interest rate. And so whenever we raise the interest rates on the shorter term ones, then the Fed starts buying those, and that's where they're like, how does that play out?
Yeah, it's going to affect everything, right?
But the reality is ECB could just say, you know what, you're right, we need to reset this and do what's right by everybody, per se, European way, and they could eliminate the problem tomorrow if they really thought it was a big issue, but they don't want people to understand they can write a check and solve the problem.
All right, we'll be right back. Darrell Martin, Tommy O'Brien, we'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We have the Dow down, listen to me. Up 160. I know, it's too much. It's down, it's up every day. I'm sitting here looking at all green across the board and somehow down. Dow's up 160. S&P's up 21. Nasdaq's up 67. So what are you trading today specifically, Darrell? What are you looking at right now? I mean, we're up 200. You know, like you were saying, it's back a little bit. I mean, what happens on days like this? Some of those spreads, and that's what I want to talk about, you know, the market moves so much that the spreads go a little bit out of, you know, the market's just away from it. And do you ever try and soak up like $1 or premium ever in those 30-point spreads? Or do you ever do anything like that when it's completely away from a spread market? I'm going to pull it up right now as we talk about that.
Yeah, we definitely have it pretty far out from a lot of the spread markets right now, too. I mean, I'm just looking at, I just pulled up NASDAQ, and I'm checking out all the...
That's what I looked at before I started talking, exactly.
And there's a lot of ways to put these trades on, but there's literally just so many different directions you can go.
Yeah.
But, you know, like one of them right now, and I mean, I'm not necessarily, like, it's sort of weird. I'm not like all about this trade, but
no, I just like talking about this strategy because even myself, when I look at it, there's obviously winning strategies, but it's tough to grasp when you look at how far away the indicative index is, the NASDAQ in this case, away from where those spread values are.
Well, check this out, though. Okay, like, I mean, I'm not really bullish at this point, right?
Right.
The market's already ran up, and I just don't feel like there's a lot more in it. But look at the 4,300 to 4,380. We could buy that thing at 4,372.
Yeah, and if
I mean, we're talking about, you know, literally, you know, 84 ticks, NASDAQ ticks.
No,
so
that's
we're,
not bad.
And we get $73 a premium, and that thing is sitting way, way down, like a half a deviation down.
Right. Okay, I see. Yeah, I mean, because what? So you're getting right now that's trading at about 43.72. And the NASDAQ 100 trading at 43.92. So you get 20 points.
We can step up, actually. Let's step up one to 43.40, 43.80, okay? We give up like about $8 on that, but our risk cuts in half.
Okay.
So definitely worth it. Like, you
I see what you're looking at.
$9 versus $730.
Right. Yep.
So making a little less money, but I mean, it's only a point difference. And you're able to, you know, basically just put up a lot less margin to do the trade.
So you'd be buying these and just letting and just absorbing that premium mostly.
Right, but now, like, if you look at that, look at going over and, I mean, this is sort of just playing some, you know, interesting little games, but, you know, you can go and you can start looking at, are there any sell opportunities in the shorter time frame that you might want to take advantage of?
Okay.
Okay. So we're almost talking about like calendar premium collection on both sides.
Okay.
You know, but like we could look at the, I don't know, the 43. I'm looking at all the options here. Actually, I like the closer one better. Right here, we got the 11 a.m. There's about $30 on that, and 43.95 to 44.05.
Okay.
Got the exact same spread for 12. Okay. But you can go in and you can actually collect about $25 in premium on that going short, and you get about 2.5 points.
I see what you're doing. Okay.
And so you can collect premium in both directions as, you know, time's moving on. So you can tell there's a massive premium decay that's going to be occurring like in the next 32 minutes right there on that contract.
Right.
And look, we basically we're making about $8 in premium over an hour if the market stays flat, because this is the exact same spread, right?
Yes.
As this is.
Yeah.
And there's only a $8 difference for an additional hour of risk, which is 3 times the amount of time for the,
No, that's a good way to look at it. I know.
So I'm like, well, if I'm only getting, 30, like less than 30% more, that's, I mean, what is that? 6? That's like 20, 10, 15%.
Yeah.
20% more.
Percentage basis, when you look at those, it's big numbers, right?
For 3, basically for triple the amount of time, that's a much better contract to go in and sell.
Yeah.
So like that's one of the ways that you can do it. You can put that trade on. As far as, is there a way I can, but there's no good master spread to go short, right? Like they're all they're all
right.
crap
No,
so
and
far
that would be, yeah. I mean, if you're looking, and I'm with you that it was up 200 pre-market. I don't see it completely falling apart for any reason. So.
Right, but you can go in there and go, hey, if it oscillates up and down for the next 30 minutes, very likely. I mean, I don't see a reason for it just to explode between now and 11. And that's not a horrible risk-reward trade. I mean, it's actually disappearing on us now, by the way, as we talk. But
I'm just looking at your screen as you pull it up, yeah.
Yeah. So, but, I mean, we got these two. This one actually has a little more premium. The 43.95, 44.05 actually has a little bit of intrinsic value in it, too. So, so there's, I mean, that's one trade option for us.
Yeah, no, I just like talking about the strategy, and this is what I talk with my dad. There's so many options, and the risk-reward, you can play it so many different ways, especially when you get this type of move in the market where you're at the extremes of the spreads or you're even above, below the spreads. All right, We'll come back. Darrell Martin, Tommy O'Brien. It's Friday. Dow's up 160. We'll be back.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative market-safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year market-safe power metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome, folks. Tom O'Brien, Darrell Martin. So, Darrell, I'm jumping around. I don't know where to go next. You know, I'm pulling up the SPY. I'm pulling up the NASDAQ. I love, the thing is I love the spreads right now, and I love looking for the bigger moves, which is great this week. But like you were saying, for being so out of whack and so outside of those spread regions, I
found one spread on NASDAQ if you're looking at a short. We're right up on that same little high level we've been bouncing off of for the last
and that's what I was going to say. Maybe we go from 40.
Check out this 43.90 to 44.20.
44.20.
So we actually got $44 of premium in our favor. We have a decent risk reward considering that that's premium that we're collecting in that process.
Okay, so this is for a daily. We're going to 415. And I'm sorry, say that again. What? So
43.90 to 44.20.
Okay, perfect. That's what I have up.
We're able to sell it a few points above where the market's at right now.
Yeah. You know what? I might even do that. That's a good, because I was just looking at it and I was saying, you know, maybe we just oscillate 10 points. Maybe we just go from 43.90 to 4,400 all day. And this would be a perfect way if that's what we're doing.
Exactly. That just oscillates down a little bit for us. I mean, it'd be a nice trade, especially if you do a little bit of size with it. So.
Yeah, and so one contract would be shorting it at 44.03, and we're getting about 4 points in premium. And of course, with every tenth of a point being $1, that's $40 within a 300-point contract. So we're risking about 166 right now to make 134. Yeah, I might do that as we play it out.
And that's pretty much right at the high.
Right. And look at it. It might be turning around. It's close. It's close. I'm going to wait a second. I am. But yeah, because I was literally looking in the NASDAQ, and I'll pull up the chart so we can show it. And it looks like, it's been oscillating back and forth just right in that same area. We're going from 43.90, 43, 80, no, 43, 43.90 to 4,400. And 10 points can be a big number in these spreads. That's a big number if you can pin it right and just trade a zone. I was listening to your show, I think it was yesterday, and you were talking about just swing trading and don't go against the market. Maybe we can talk about something like that where you just need to be willing to turn on a dime. And I liked it because that's where, I'm in my dad's camp in that I think overall in the long run, I see a lot more exposure to the downside in terms of where the market could go to the upside. But I loved what you were saying because right now this week I was looking to go long almost as much as I was looking to go short every time it went down to those lower levels.
Right. And by the way, I am short that contract just so we can.
Good. Nice. Perfect.
Yeah.
Perfect.
4402.9.
Perfect.
For our listeners, that's the 43.90 to 44.20 contract.
Yeah.
So
and I had the chart up. I had it up. I have the chart up so they can check it out for sure.
Okay. So, whenever it's more volatile, there has been the last couple weeks. A lot of traders, I mean, like they'll step away. You're like, oh, that's really when to step in.
I heard you saying that, and I know it happens, but you can't. Yeah, not with this type. Not if you're an active trader at all. I mean, there's no way that you.
Well, and here's what they aren't used to. They're used to. They get to have a little bit of opinion. Like, okay, like I see a resistance. Like right now, I'm like, okay, I see a resistance level. I think it's going to bounce off that. Okay. And so they're playing some of that normal that works 70% plus of the time. Okay. There's the normal, your support resistance, everything else. But when markets are extremely volatile and they're moving 60 points on what used to be a 30 or 40 point average day.
Yep.
Like deviation is like 30 or 40 points. So we're getting 60, 70, 80 points. We're getting 400 pips in the pound yen, stuff like that.
Yeah.
When the market's doing that, you don't have any room for opinion at all.
Yeah, no, I like that's what I want.
Literally, you have to get over it and change direction and understand you may end up changing and flip flopping like 2 or 3 times and get chopped a little bit.
Yeah.
But if you will change with it fast, then one of those times it's gonna just kaboom.
The moves are so big. I'm with you. I am.
And you're gonna clear some cash.
That's. I mean, yeah.
But if you try to outguess it, you're gonna call every wrong turn, and it's just gonna. You're like, oh, it can't keep going.
Those moves they're so big. I mean, I was almost going to go through.
It can keep going. Like, I mean, you look at this. I mean, like, look at it yesterday. Okay.
Yeah.
You go over here. I mean, this is sort of a tough little area to trade right here in the morning. Traders come in. It's been flying up. Okay. And then all of a sudden it starts coming down a little bit, but it's chopping on them a little bit, right? But I mean, if you would have went in there and you went short, then you went long, and then went short, went long, you got a couple chops going on. All of a sudden you caught a nice short. When that thing went up, if you would have just grabbed the long and got out of the way,
yeah,
you only would have caught a couple points by the time you knew to get out and go the other way. But if you would have went the other way immediately, you would have cleaned up. And then you got a little choppiness going on. But I mean, it went down all day from there.
Yeah.
But you had to be willing to go, okay, I know I'm gonna have to take a couple stops here.
Right.
But if I'll just go with it, eventually. Like this kind of volatility, you're gonna get the boom.
Right, because you're playing for big moves. That's what you're playing for big moves.
And so you got to get over like loss.
Right. No, I agree. Yeah.
You just got to be ready to run with it.
You're looking for 2% index moves on a daily basis, up and down, which is like amazing. Seriously, when you think 2% down and up in the same day, that the market can't figure out a valuation for an entire index within 2% of where it should be. Within 1 8-hour trading day.
Exactly.
It's pretty wild.
And so, when there's those kind of, like, the moves are coming. So hop in, grab and be okay with smaller profits, be okay, whatever. Yeah. But when it's running, I mean, like, you got to let it go.
Yeah.
And it's sort of like, this is what you train for as a trader.
Yeah, you should really love this type.
I'm sure you've heard or met Ben Lichtenstein, the guy that calls out the pit audio voice, down at CME.
Yes,
I know. He has this big plaque on his wall that says, like, to be here for the good days, you got to be here for all the days.
I heard you saying that too. Yeah. Yep.
And these are the good days, but you got to be there for all the days and learn how to ebb and flow with the market.
Yeah.
And like my daughter Felicity, she's riding her horses, she's competing and all that stuff, and her trainer a couple weeks ago before she went to Worlds was teaching her how to basically dance with her horse.
Okay.
And basically what they do is they put 6 poles like across the arena, and they're 20 feet apart. Okay. And she runs like straight down, and then she turns around and she literally she weaves between the poles all the way back, turns around, weaves between the poles all the way to the other side of the arena, and then runs all the way back down. Okay. And while they're going on each one of those poles, she needs to like rock with the horse. So as the horse is moving and leaning, she moves and leans versus trying to like just remain straight up.
Sure. In harmony, right? Sure.
Exactly. But very like nobody else did it. Like the entire, so cool. I mean, there was like 1,200 kids in this competition.
Man.
Not another, like nobody else was doing it. And it's a very advanced thing, but it's dancing with the horse. And as the market's leaning,
I like it, man. You gotta dance, right?
You gotta
dance with it.
You gotta dance with the market, And I mean, you get out of lockstep, and it's gonna step on your feet.
Yeah, especially like this. I mean, if you're these types of moves, if you're not quick.
And I mean, it's going. We called the short, moving on down.
That's awesome.
So I got a nice little. I got 50 contracts on.
Yeah, look at that.
So it's moving.
That's a nice little move, man. And look at it. So it's right.
I will cash out in a heartbeat right now.
I was just going to ask you. So this is the level, where maybe this, or maybe we just blow straight through it, right?
I know. Well, the next level to go down would be 0.7. And
okay.
So at that point, I'm going to take off at least half.
Okay.
But.
So is that what you're doing? You're looking at those standard deviations, and you're at the 1 right now. And if it starts to pull back at a 0.7, that's maybe an area that it can.
Oh, I definitely want to take off at least half my position if it got on down into this zone right, because this is where we had our last little rocky area right here, right?
Okay.
So if you can sort of tell, let me get rid of my scanner out of the way. And so like right here, this zone.
Okay, sure, that makes sense. Yep.
Is pretty, that's where the market basically little battle happens.
Yeah,
right?
No, just visually, and that's what so often it's like,
And we're sort of at that battle zone right
on the top of it. Yep.
On the top of it. So. Yeah, I may actually go ahead and take off, some of my position.
Or just keep a really close eye on it, right?
Yeah, I got my tickets open, and
that's and I do that too. When it's at that resistance point, it's.
I'm so ready just to be like.
The volatility is so quick, right? It could pop in no time. It could pop down in no time. You got to be quick fingers.
Yeah, and I don't care if I have to close them all and then buy them all back or sell them all back again. If it starts going back, I was like, I shouldn't have closed it. Okay, I'm down some bit of spread.
Yeah.
It's like, you know what? I just locked in $1,500 while we were on the air in a few minutes.
Pretty sweet.
So
man.
I think it's okay.
Now, for the Nadex spreads, now you're paying 90 cents commission per contract, but that's only up to 10 contracts, right? And so it's $9 max per trade. Is that so? When you're trading those 50 contracts, is that 9?
Exactly. Yeah. So if you do them all in one shot, okay, like 50 contracts at once.
Yeah.
Then you paid $9.
That's a pretty sweet deal.
So
man.
that's like basically for futures traders out there. Okay, 2 Nadex U.S. Tech 100 spreads equals 1 Nasdaq future contract. Okay, so that is literally paying a commission for entry on 25 Nasdaq futures of $9.
Yeah. So
most people are paying maybe 4. If they have a really good rate, somewhere around 4 to 5.
Okay.
So 4 times 25, that'd be dropping $100.
Yeah.
Right. So I just got $90 in my pocket.
Right.
That I didn't pay because I didn't use futures to do that trade.
No, it is. And I was having this discussion with my dad.
I sold it 4 points higher than where the market is.
Yeah.
Whenever I got it.
Right. And you're using different strategies. You're playing different risk rewards on top of it. Especially on days like today when the market's away from wherever the middle point of that spread is.
Right.
But yeah, I mean that's and of course as you're building your account, those numbers can grow. But when I started seeing that and really just kind of calculating what you were exactly saying, percentage-wise, again, that's a big number. Anytime you can deal with percentages and you're only trying to make percentages, they add up quick. They really do.
Yeah, that thing's going. Come on, keep on going down. Won't be too bad of a.
It's nice when you can do a show, make some money live on air.
I love the bull bear binary hour, man.
It's been good. I tell you, if the volatility stays like this.
I've been making $1,000 every show we got. I'm like, we need to do this show every single morning.
That's awesome.
Get together
man.
and make it happen.
That is.
But just combining the minds,
No, and there's such. I mean, that's the moves. I talk to my friends, and I tell my friends that they should try the demo and do it themselves, because with the 100-point moves in the NASDAQ 100, it's like no matter what you're trading, the volatility at play, it's just enormous as long as you're keeping your stops in play and your risk reward in play. It's like, I see it as a big opportunity. I do. Now, I love volatility and I love playing for those bigger moves. And so that's kind of the angle I look at it. But this week that changed because we've seen it go up and down so often that I just started range trading. And that's why listening to your show Thursday, it was perfect. It was like, exactly, man. That's right where I was. You just go with the trend and don't think too hard about it. That's the way I look at it.
Now, one of the things you talk about often is like, is it still worth being in the trade?
Yes, I like those. Yep.
So, looking at this, do you see if it's still worth being in the trade? Okay, so we gotta move down to 43.90. That's the lowest we can go.
Yep.
Okay, we got about 12 points left. We have, technically at this point we have 18 points of risk. Okay.
Yeah.
So now there is premium. We know we got premium. And the best way to figure out what I've learned, sort of a trick on how much premium is there in a contract, okay, is I'll go over here and I'll look at this. Let me pull this up. I'll look and go, okay, where's the market? The market's like at 43.90 right now. So I'll try to find a contract that's, around 43.90.
Okay.
Like a ceiling or floor. Okay, and then see, what is that quote? Okay.
Okay.
And what that shows me is like, okay, how much of that is premium? It says basically almost all of that is premium right now. So $35 of that is premium. So it's about $35. That's between now and noon.
Okay.
Which probably means there's closer to around $50 because we have a 43.80. We don't quite have a 43.90.
Yes.
But if you can find, when you see it pass a strike, you sort of get the idea of that's how much premium there is.
Okay.
So I know I'm probably not going to be getting much of that premium when it gets down to that floor.
Okay.
Like there's sort of a point, like about maybe 3, 4, about 5 points for around 43.95.
Yeah. No matter what, it's not going to go below that level, right? At that floor, at least, right?
Exactly.
Yeah.
So we get down to about 43.95. I mean, eventually you'll see that premium decay out, or if it goes far enough, it'll
right. No, I like this conversation because that's one thing that took me a little bit of while is that you say, oh, okay, my max profit is at the bottom level of this floor.
Right, so I'm going to buy back at 43.90.1.
Right, right. But guess where the market needs to go?
30 points of premium.
Right,
so
guess where the market needs to go for you to get that? Right, the 43.60 at least by noon, right, exactly.
So it's like, are you going to wait on it to go to that profit level and stay there, and for the next 3 hours until that premium decays out?
No, we had in the same way you're talking about. I loved your 80% rule, and I've started almost sticking to that, and it has to do with what you're talking about here too, because when you're dealing with the spreads, you're not going to get 100% unless you take them to the end of the day. So there's always
it sort of helps out with that premium issue as well without having to make it really complex.
It really combines well with trading the spreads because there's always going to be a buffer, like you said, because there's an opportunity, just like on the other side of that trade. You're not going to take that other side of that trade without any premium because you're giving all that opportunity to the upside of that spread. So that 80%.
We did the math on that to talk about it. Go to 4402.9, right? And then it can go down to 43.90.
Yes.
Okay. So we got 12.9. We can make $129 per contract on this.
Right. That you have left potential profit. Correct. Yes.
Total profit.
Right.
Yeah.
Total.
From what I got in.
Sorry. Yes.
And then so 80% of that is $103.
Okay.
Okay. Or 10.3 on Nasdaq. So
Nasdaq points. Yep.
4402.9 minus 10.3. That puts me at like 4392.6.
Yeah, that could be a good number.
That's that's pretty much, now that's if we go down and if we hit 43.90, which we're not, we're already there.
Yeah.
Right?
Maybe if that, what do you think that would have to dip to get 92.6? Maybe like 43.85, 43.80?
Yeah, because you have to get down to $25 in premium left on the trade.
Okay. So. Yeah. All right, we'll come back, talk some more. Tom O'Brien, Darrell Martin. We'll be back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Tommy O'Brien, Darrell Martin, and quite a Friday going on.
It is. It's moving.
So, are you out of that trade?
Yeah. That's profit. I was like, it started to move back up. I'm going to grab some, but I'm ready for it to go back down again.
You know, it's perfect we're having this discussion because I'm sitting here saying I'm going to watch this for the rest of the day because literally 43.90 to 4,400, maybe that's the range. Maybe it's just going to be a slow day of 10 points, and 10 points is a big number if it can just oscillate in there, and you're waiting for the bottom, you're waiting for the top.
Exactly.
Yeah.
So, and I mean, and there's a lot of things you could do too. Like, you know, we were always talking about different possibilities on trading on Nadex, right?
Yes.
So we went over here and we looked at shorting this contract on this side, and I mean, but other contracts you could look at. I mean, like if you're, I mean, this is a very short hedge.
Okay.
But you know, you're like, oh man, it's popping, and like I have a point of control right there. I'm like, and I got a deviation right there, and I'm thinking it's gonna fall back down, and I mean. It's sort of it feels like a waste of money, but I mean, the floor is at 4,400. We're sitting, right there, pretty close to it. 4,400 probably isn't going to work real well, but we got, 43.95. That's a little better example.
Okay.
And so you can go in on this, and you could hedge if you wanted to instead of exiting.
Okay.
Okay. You could go long on that trade and, risk a few ticks, but go, I think this thing might go, I really think it's going to go down. I really don't want to close out all the contracts I got. So what I can do is I can actually go in and put on, I mean, it's like buying a call to hedge a short position or buying a put to hedge a long position.
Sure.
And people don't think about doing that options with options on Nadex. Just, because
what I was going to say is we should do a whole show on these complex strategies because that's something where I haven't quite gone with my trading on Nadex yet. And I'm sure that a lot of people could benefit from just looking at double-sided trades, two-pronged approaches to one strategy.
Exactly. Yeah. And as you start putting those different, pieces together on which, trades do I want, which contracts do I want, it opens up so many more possibilities.
That's because I love how you talked about the binaries as a way, and I've started looking at that much more. Maybe, where you're in a spread and you're collecting premium, and then you're going to use some of that premium to then leverage yourself, and not leverage yourself, but cover yourself somewhere using a binary, and how those premiums line up so well with where the binary is and how they're assigning that premium value. So I've started looking at that. Now I'll have to start looking at using two spreads.
Yeah, so it's pretty cool because you're like, wow, there actually is something there.
There's so much strategy and risk-reward analysis, and that's what I love is that you can really, what is your strategy, and figuring out how best to implement that.
Right. And I mean, when you figure it out, when you get those pieces together, you get so much more confidence in your trades.
Yeah. You really have to understand what you're doing and understand, the vehicles that you're getting into, whether they're spreads, binaries, what index. Yeah, are they going to accomplish what you want should the market move where you think it's going to move, right? Because that's the worst, when you have something do what you think it's going to do, and maybe you didn't analyze the products you're getting into well enough, and it doesn't make the move you anticipated it would make, or so forth.
Exactly. And the other bad thing is when it does what you think it's going to do, and you don't take off your profit, or you don't do your stuff. You know what I'm saying?
You don't listen, right? You don't follow your own plan. That's pretty. Yeah.
When you get in, and I mean, you got to have that plan.
We were coming back from that commercial, and I had the Nasdaq up, and I said, I'd be shocked if you weren't out.
I said, I'm like, here's my goal to take off half, but I'm like, this is our war zone, and if we don't see it pop, and it did it. It came down to that war zone, and it oscillated right back up.
I just pulled up the chart. It's like literally exactly what we were talking about. You shorted it. I mean, it's probably time to get right back into it. Literally, it's right back up.
Yeah, I mean, it's basically, and that's the other. Here's the other thing people don't get. A lot of times they're like, well, if I hold on to that position, right, then I may be able to actually, I can make so much more money. Like that's where we get stuck, right?
Yeah.
Because man, it can just really fall.
Yeah.
Okay. What they miss out on is the fact that, one, they had to ride through like a loss or moving back up, but two, I mean, there's a long position on right now.
Yeah. Right.
And if it does go back down, you get to ride it again.
Yes.
You make even more money.
Right. The opportunity cost. Opportunity cost is important, man. It is. Darrell, thanks so much, man. Have a great weekend. All right. We got Basil Chapman coming up next at 11 o'clock. Thanks so much. Have a great weekend. Safe weekend. Talk to you guys on Monday.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.